your host and the consumer quarterback, Brandon Rhymes.
And yes, welcome to the Consumer Quarterback Show, always helping you win in any marketplace. We got a great lineup for you today on the program. Alex Lima, Black Belt Fitness and Martial Arts. We got Tom Rydberg in the house as well. DK Mortgage. We're going to talk about all the latest news in banking, Federal Reserve, of course, raising the rates, bank trouble spread to Pac West. There's another bank that's in trouble, and have really good content lined up for you in terms of the Washington football coach as well. Gets paid. He was the coach that was fired, put on leave, and we're going to update you on that story as well coming up here on the program today. Now, on the Consumer Quarterback Show, we're powered by the Platinum MVP team at Keller Williams Realty, and my wife Lindsay and I own a top team, and we help our sellers profit more and sell faster utilizing our innovations with radio, TV, and internet marketing. So we've got a hot listing here in Tampa Bay. This property is 12290 101st Street in Largo. Now, what we've got is a rare find. This is 11 acres in Pinellas County, ready to be developed. Now, you've got 4.9 acres that is buildable, and the sellers have already completed what we call a feasibility report put together by engineers. 22 single-family homes can be built, or up to 43 townhomes in this community in Largo on Lake Seminole, the second largest lake in all of Pinellas County and Tampa Bay, rather. 12290 101st Street, Largo, one of our hot vacant land parcels of land here in Tampa Bay that you can build on and develop. We've got several other parcels available for sale in Tampa Bay, vacant land that you can build on here in Tampa Bay. And you can see all of our real estate listings at platinummvpteam.kw.com. Buy dirt, find one you can't live without. And let's also thank one of our newest sponsors, proud to announce a new partnership with Patriot Mobile. Are you tired of woke companies trying to destroy our country and strip us of our freedoms? Big Mobile is no exception. In fact, we should be calling them Woke Mobile. Did you know that Big Mobile gives tens of millions of dollars every year to organizations that are trying to take away the very freedoms that you and I are working so hard to defend? It's time we do something about it. And here's the good news. You do have a choice in the matter, and there is an alternative. Patriot Mobile is America's only Christian conservative wireless provider who shares your values. They offer the very best nationwide coverage on 4G and 5G LTE networks and exceptional 100% U.S.-based customer support. Patriot Mobile donates a portion of every dollar earned to conservative organizations that fight for our freedoms. They support organizations like Liberty First, Turning Point USA, Susan B. Anthony List, NRA, Folds of Honor, Students for Life of America, and many more. This year, they will give more than $1.5 million to conservative causes, and with your help, they aim to double that next year. The time is now. Our votes are no longer enough. We must stand together and support other like-minded companies that share our beliefs and values. Your cell phone is one way you can stand against the left and help make America great again. Patriot Mobile offers discounts for veterans and first responders, NRA members, and families with multiple lines. Learn more at patriotmobile.com/consumer QB. That's patriotmobile.com/consumer QB. Or if you'd like to give us a call, you can reach out at 727-263-3707. That's 727-263-3707, and we'd be happy to tell you more about Patriot Mobile. All right, let's jump right into it. We got Tom Rydberg in the house. Welcome in, sir.
Good to be here.
Awesome, man. Good to have you, and appreciate the timing is great because there's a lot going on in the banking industry.
Yeah, out of nowhere, right? A couple weeks ago, everything seemed to be just strolling along. We're just worried about the Fed, and then bam, we get hit with Silicon Valley, and then now we have a few other names popping up.
Yeah, that's right. So this one is bank trouble spread to the west. It says Pac West Bank Corp saw its stock sink 17% Wednesday after announcing that customers had withdrawn almost 1/5 of their deposits since the start of March, a sign of the panic that has hit regional banks following the collapse of SVB. The Los Angeles-based lender said it has taken steps to bolster its balance sheet, raising $1.4 billion from investment firm Atlas SP Partners, borrowing $15 billion from the federal government as well. So isn't that what this is about? A lot of this is about the liquidity, right? Especially when people pull money out.
Yeah, that doesn't sound quite as bad as the other ones because somebody was willing to kind of step in there and invest. So that's kind of a good sign. But, this is just one of those, another unintended consequence of the Fed raising rates so quickly.
Yep.
And I think you made a comment. It's the fastest rate since
generation.
Generation.
Yep.
So, they're working to kind of curb inflation, which is you're seeing some of the effects of that. But a lot of these people had hedged investments and other things and didn't expect that. Now, they should have. They should have been more diverse. I think that was the big complaint that they're talking about, how they were mismanaged. But it'll be interesting to see what other names come out and how that carries over to the mortgage world. So, Fannie Mae, Freddie Mac, HUD, that's a big backstop. There's no one's suggesting there's any issue with those organizations or the mortgage industry as a whole. However, some of these smaller, they call them non-QM, non-qualified mortgages, kind of like the old alternative loan programs of the early 2000s, bank statement, stated income, debt service loans, things like that. Those are privately funded investments, and it wouldn't shock me if some of those companies, because it has been a tough year in the mortgage industry as a whole, you add this on, they might be, not showing up to a closing someday. So I'm always leery of using those programs. I think consumers and realtors always want to know about niche products and what's kind of sexy out there. I try to stick to the bread and butter and do a great job at that. We have those available, but you really kind of got to be aware of what's going on right now. So.
Yeah. We're talking with Tom Rydberg. He's our local choice for all your mortgage advice here in Tampa Bay. DK Mortgage is his company, longtime friend of the program. Support the local economy by supporting the Consumer Quarterback Show and all of our expert contributors online at consumerqb.com. And Tom, the leadership in D.C. is feckless. They are a bunch of buffoons, in my opinion, especially when you look at the and then they try to redefine these words, and they redefine what a recession was, right? And then they say, oh, this is just transitory. This inflation is just transitory. Janet Yellen, how come they can be wrong on so many fronts and not get fired? But most average people in America, if they're wrong time and time again, they're not going to have a job.
No. Well, there's no accountability, right? So they're voted in, and then they kind of stay in longer than you'd like, and I don't know who they are accountable to.
Yeah.
But it's frustrating because they get stuck on an opinion. And listen, these are big, challenging problems. COVID. There's a lot of moving parts that got us to where we're at, and no one's suggesting that it's easy. But it would be nice if they were a little bit open to some outside opinions. Maybe the business world has been kind of screaming for a while, like, hey, let's take a pause. A lot of the policies they put into place take a while. They don't show up overnight.
Right.
And I think the fear is that they've gone too far, and this banking situation isn't helping. A lot of people have speculated the tightness and the restrictions that are going to go on in the banking world now is effective like another point increase in the Fed funds rate. So it was a little bit interesting to see them raise rates a quarter of a point. Now, just 2 weeks ago, a lot of people were predicting a half a point. So maybe we're near the end. That's the hope. Well, it'll be interesting to see, future data here in the next couple of weeks.
Yeah, because they were also saying that this might be one that they skipped. They may not raise this time because of, because if you analyze what happened to SV Bank, they had a lot of money put in these long-term bonds, and then you have that inverse relationship to the federal funds rate, where when the funds rate went up, those bonds went down.
Yeah.
Right. So then that affected the value of those bonds went down. So that affected their liquidity, and that caused a lot of the downward spiral. And like you said, too, the mismanagement. This is Silicon Valley. This is California. And we know the policies over there, too. They're big in the ESG investments. I saw a video circulating on one of the podcasts that I listened to about they had this class that they had to take about pronouns, which pronoun to use. So they maybe should have been focusing a little bit less on the pronouns and the different types of DEI hires, and maybe a little bit more on their risk analysis, right?
Right. Yeah, exactly.
Yeah. So that's the challenge you see with these new and modern types of ideologies. You're losing the actual fundamentals. And going back to what you were talking about with Janet Yellen and Jerome Powell and some of these folks, they were intellectuals, they went to school, they got a degree, but they never ran a business. They never signed the front of a paycheck like you and I do when we have to meet payroll and we have, 20 plus people accounting or, depending on us. These situations with these guys, they're political hacks. They're good at getting elected. They're good at, smoozing the right crowd and going to the different cocktail parties. And, and that's all they do. They're political organizers.
But it's not a substitute for real life experiences.
Exactly.
In a boardroom with, executives making those decisions. So
that's right.
I don't know. I don't know if that's ever going to change, but that's where we're at today.
Yeah, exactly. And now who's paying the piper, right? The small middle businesses. If this continues, I heard something to the effect that there was about $15 billion, and this was in the first week or so of this whole banking, recent collapse type stuff happening. With a couple of these different institutions, $15 billion were pulled out of small, local, regional banks and put into the big bank. I don't even want to say their name because I don't like them.
Right.
But, what does that tell you?
Well, not only but I think the Feds even leaned and kind of coerced the big banks to throw money at some of these small regional banks.
Right.
Which is only going to make them bigger and more powerful. Yep. Which is, I think most people want more of a level playing field.
Right.
And some of the rules and regulations are putting, it's a disadvantage to the smaller, mid-sized banks. Yep. So this really swings the pendulum now the other direction.
Yep.
So I don't know how that's going to shake out.
Yeah, and I think it's an old, it's a play. I think it's an old setup. It's a big game of Monopoly, and the guys at the top, they're figuring, hey, here's what we're going to do. We already know and when the rates were so low for so long, a lot of them were buying up assets, borrowing money, buying back their own stocks. So the stock buybacks cause their valuations to go up. So it's a big game of elites and kind of the in crowd, as you mentioned. But how does the small person win? That's what I wanted to ask you. How if I have a small business or I'm looking to refinance my mortgage or maybe pick up a couple investment properties and I call up you, Tom Rydberg here, DK Mortgage. What's that situation look like and what can you do for our audience?
Well, locally, I think we're a lot more in touch than most lenders, especially if you're going to go through a big bank. You might be thrown through a hotline. That person could be in Washington State and know nothing about, the local market here. They may not have any great contacts like yourself as far as real estate, and kind of know what some of the trends are. So I don't pretend to be a realtor, but I know a lot more about the trends in Florida than a loan officer that's in another part of the country.
Right.
We have programs specific to Florida that I think I touched upon this a couple weeks ago, and I was asking about what percentage of licensed realtors are local to Florida, because you have a lot of out-of-state realtors.
Right.
Well, there are a lot, and I would venture to guess 50% of the licensed loan officers for Florida don't reside in Florida.
Wow.
So there are some programs that they are not able to offer, which because I'm a resident, I do have it. And I give the state of Florida and Florida Housing a lot of credit for implementing that.
Yeah.
To kind of say, hey, we know they can manage these programs better than somebody out of state.
Right.
And it's not just Hometown Heroes, which is a grant program, but there's a lot of other ones out there. Local appraisers that we have good contacts with, inspectors, all those things make a big difference when you're buying your first house or even just an investment property.
Yeah, absolutely. When we come back, I want to take a quick break. But when we come back, though, I want to ask you about down payment assistance programs. What are you seeing in that space? Do we have any kind of special programs that could maybe help some of our lenders here or some of our listeners, our audience? And then also a little bit more, we're going to expound a little bit more on this Fed rate hike and what that means for you. Support the local economy by supporting the Consumer Quarterback Show. And check us out online at consumerqb.com. We'll be right back.
This is Warwick Dunn, and you're listening to the Real Estate Quarterback Show hosted by my man, Brandon Rhymes.
Brandon is Tampa Bay's #1 consumer advocate for real estate and financial advice. Call Brandon today at 813-917-1894.
All right, welcome back. Brandon Rhymes here. Consumer Quarterback Show, powered by the Platinum MVP team at Keller Williams Realty, featuring some of our hot listings right here in beautiful Tampa Bay. By the way, I've got 100 acres coming up over close to Orlando, close to Disney World, like 5 minutes from Disney. Should be a listing agreement signed on that any minute now. 100 acres in Orlando. Any developers out there looking for that, that's a great opportunity to build, some townhomes right there. I think that's the highest and best use going to be for that one. We just did a price reduction here at 2817 Gulf City Road as well. We're down to $1.69 million here. Got an LOI coming, waiting on the paperwork to come in, but that's a great opportunity for developers, builders. 2817 Gulf City Road. You got acreage on the waterfront, 23 acres on the Little Manatee River, bay access into the beautiful Gulf of Mexico. That is Hillsborough County, one of our hot listings here in beautiful Tampa Bay. 4404 Orient Road is a commercial property that we've got. This one is just down the road from the casino, the Hard Rock Casino there, 4404 Orient Road. Commercial building, over 6,000 square feet, well-built office building. All 5 units are currently leased, ample parking, recently updated interior. This would be a great opportunity for investment into your real estate portfolio. Just did a $150,000 price reduction on this property also. It's down to $1.3 million from the Platinum MVP team at Keller Williams Realty. You can see all of our real estate properties at PlatinumMVPteam.kw.com. Yeah, shout out to our troops out there fighting, foreign and domestic, helping us stay safe every day, doing a lot of things behind the scenes. Veterans, first responders, teachers, nurses, seniors. We love to give discounts to anyone out there looking to buy, sell, or invest. And then, Tom, you had mentioned the hometown heroes as well earlier. What do you got out there for veterans, first responders, teachers, nurses, seniors, those types of folks?
Yeah, so veterans always have, or in many cases have, VA option, which is no money down, reduced lender fees, reduced interest rates. But Hometown Heroes is for veterans, but also, like you said, first responders, teachers, and just a huge list of different occupations. Now, those funds are starting to dwindle, but there's still some available funds. They speculate through probably July, and I think there's a bill going to the House to extend those funds. Nothing's been announced officially, but that's kind of the rumor on the street. It's been a very successful program. Successful because it's not a cumbersome one. A lot of people are able to qualify. It's a fluid program through Florida Housing, so you can do a traditional, 35-day, 40-day close, unlike some other programs.
Nice.
But even if you don't qualify for that, for whatever reason, right?
Yeah.
Could be income, could be credit score. FHA is still 3.5% down, where you can get up to 6% concessions from the seller, which is huge in this market. Now you really get realtors working together to make deals happen, right?
Exactly.
So maybe that doesn't happen the first day it's on the market, but after it sits, they don't get a quick sale. They're open to, working with the buyer on their terms to kind of put together a win-win. And we kind of cater those types of deals because we can kind of be proactive if there are maybe some issues or concerns people have about the appraisal. And then Fannie Mae and Freddie Mac, a lot of people don't realize it's not 20% down, people. It's 3% down.
Right.
You can get 3% concession. So you don't have a mortgage payment the first month. So if you close in June, your first payment's not until August. You can get a gift from family members, work. So lots of options out there.
Now, are there any other types of down payment assistance programs? What are you seeing in that?
Outside of the state of Florida, I mean, you will hear of some that come and go. I'm not a big fan generally of a lot of those because they do have a lot of excessive fees. They're unreliable. They don't have a fluid process.
Yeah.
And I don't want to be necessarily involved in that transactions when it goes wrong because, the funds aren't there for closing. So I really do try to stick to the mainstream, the ones that we're super smooth at.
Yeah, that makes a lot of sense. And then outside of that, too, we talk to when we talk about some of the previous loan programs before, you had mentioned like bank statement loans, some of these different types of niche products, non-qualified mortgage, kind of outside of the Freddie Fannie window. What are you seeing in that space? Is there anything out there?
Well, I think the bank statement program is the most relative one because it makes sense, right? And I think there are some investors that have a track record of performing loans, where they have a big down payment, they have good credit, but because of the way they run their company and how their accountant does their books, it just doesn't necessarily show up on paper. This past year, they could have a track record of 10 great years. Yeah. And last year they decided to do a lot of capital improvements or something else that throws their numbers off, but they cash flow with, business bank statements. That makes sense.
Makes sense.
Some of the other ones, a couple months out of a foreclosure, maybe you need a little bit more time off before you jump into another house. Not to be one that judges, but those are the ones that don't. Credit score is still a huge predictor of success. Down payment as well. So I think bank statement is probably a good one. Now, if you have a really successful investor that knows what they're doing, those debt service programs are good ones where you can buy an investment property. They look at the cash flow. What you have to be careful of
based on the rents.
Based on the rents. So even though in theory you only have to maybe put 20% down, but because of the higher rate that those programs come with, and rents are starting to level off, maybe in some areas maybe even come down a smidge, you need to put more money down than you'd expect to make that debt service ratio work.
Right.
But that's another one I hear quite a bit about.
Yeah, those are good. Okay, so rent versus own is another area too. If there's folks out there still renting in our listening audience, we'd love for you to reach out. Tom can put together a rent versus own analysis, and I almost can guarantee you you're going to be paying less money in a brand new mortgage than you would actually be paying in rent. 727-263-3707. You can call or text that hotline, 727-263-3707. And Tom, would you take about 45 seconds or so and explain that rent versus own, how that works?
Yeah, so we look at historical data about appreciation. We don't look at the last 2 or 3 years with that type of appreciation, but we look at what rents are expected to do, what your mortgage payment is going to be at today's interest rates, and they'll kind of graph it out and show you the affordability is much more than you would expect. The other thing, a lot of people that have never owned, it's the freedom too.
Yeah.
When you're a renter, it's easy to kind of take that for granted for you and I. We've been homeowners for a long time, but that's a big value that people see in owning over renting. You control your own destiny.
Yeah.
And not only you don't have to worry about the rents going up, oftentimes your mortgage payment comes down over time. You get rid of your PMI.
Right.
Refinance
later.
Some
cash out.
And that's the big, I guess, the big topic people are talking about now. Buy now. You're buying a house, you're renting a mortgage.
Yeah, exactly.
So you can always refinance.
Yeah, change that rate later. Tom Rydberg, DK Mortgage, longtime friend of the program. And the other cool thing about owning is you can throw parties and not get kicked out.
Amen.
Maybe the HOA might get on you.
Right.
Yeah. All right, Tom. Thanks a lot, man. Appreciate you coming in.
All right. Good seeing you.
All right. Taking a quick break. Coming back, Alex Lima, Black Belt Fitness and Martial Arts. We're going to discuss an American icon, Thomas Edison. Came across some really cool clip there. Also, that football coach that got his settlement. We'll be right back. Consumer Quarterback Show, consumerqb.com.
Thanks for listening to my daddy's show. Please make sure to send him all of your real estate deals and subscribe to the Consumer Quarterback Show podcast on iTunes and Spotify, or check out our YouTube channel. Have a blessed day.